Every day, there's a flood of noise telling investors the same old story. Follow the market, chase the indexes, blend in. But all you want is something different, something that moves independent of the madness, something that doesn't look and act like every other portfolio drowning in the chaos. You felt it, that gut punch of watching your investments dance with the crowd, going up one day only to fall sharply the next, tethered to the same cycle. How many times have you sat there, heart racing, wondering why your returns scream and shout when the market flexes instead of standing firm? You are desperate for an edge, something real, something that doesn't vanish when the world wobbles. That itch you can't scratch, non-correlated returns, that's the holy grail. But what does it even mean? Why is it so hard to find? Because most investors are trapped in a world where everyone's shouting the same tune. Buy low, sell high, ride the wave. The truth is, hedge funds don't play that game. They don't follow the waves. They create ripples of their own. That's how they keep their gains steady while others buckle. It's not magic. It's a mindset, a toolkit, and a relentless refusal to be a slave to the market's fickle heartbeat. Imagine you're standing on the edge of a cliff. Below, the market roars like a stormy sea, crashing and pulling with brutal force. Everyone else jumps in, hoping for a splash that turns to gold. But you find a way to walk along the cliffside, far away from the chaos, untouched by the waves below. This is how hedge funds work. They carve paths where others see only risk. They are the edge players, the rule breakers, the ones rewriting the book while everyone else is busy reading from the same page. And here's the secret they don't want you to know. Non-correlated returns come from diversity, not just in assets, but in thought, strategy, and timing. At the core, hedge funds use strategies totally different from traditional investors. They look for opportunities that don't care if the stock market crashes or soars. They chase inefficiencies, the cracks, the blind spots, the moments where others see chaos and freeze. Statistical arbitrage, merger arbitrage, global macro plays. These aren't just fancy words. They're weapons in a battle for independence from the market's chains. Picture this. While most are drowning in trends, hedge funds ride the patterns beneath the surface. Patterns invisible to the casual eye, patterns born from data, psychology, and relentless analysis. But here's where it gets powerful. Hedge funds don't just rely on one trick. They combine multiple strategies across different assets and geographies. It's like weaving a safety net so complex, so tight, that when one part breaks, the whole doesn't collapse. That's how they achieve resilience, a portfolio that has anchors in places where the market can't pull it under. This is not some passive hope. It's active, ruthless management. Each decision, a precise move against volatility. Each allocation, a shield against loss. You might think it sounds complicated, but it boils down to a mindset, one that refuses to accept the normal volatility and correlation everyone else just bows to. Hedge funds thrive by questioning the obvious and chasing the obscure. They seek out uncorrelated assets, things that don't dance to Wall Street's tune. Think private credit, distressed assets, commodities, currencies, alternative data-driven opportunities, and even short selling. By balancing these, they find a rhythm that moves to its own beat, rhythmically independent from the loud market clamor. They know that to truly win, you don't just invest in what's popular, you invest in what's misunderstood, overlooked, or rejected. And here's a brutal truth. This path isn't for the faint of heart or those craving comfort. Hedge funds burn the rulebook. They don't settle for mediocre copies of common investment tactics. They relentlessly challenge their own assumptions. Every trade, every move, is a test of reality, of market myths and risk models. They harness complexity like an artist with a brush, painting with precision where others flail blindly. This isn't just investment, it's a rebellion against the fallacy that markets are predictable and that failure is normal. The real power comes from what hedge funds hold inside: intellectual freedom. They aren't trapped by national borders, by institutional dogma, or outdated regulations. They think global, act agile, and embrace the chaos. They build networks of information, insights, and connections inaccessible to most. This network creates synergy, a force multiplier. When your edge comes from being connected to the right minds and ideas, you don't just survive the storms, you own them. It's hard to imagine because the world wants you to accept being just another part of the noise, mediocrity dressed up as safety. But the truth is, freedom comes at a price. Real freedom, the kind hedge funds embody, is ruthless selectivity, patience, and the discipline to sit alone when the herd charges, to question every fact and refuse false comfort. That's where non-correlated returns are born, in the silence between the chaos, in the space where few dare tread. This is the rare and unspoken terrain where the very best make their stand. Think beyond stocks and bonds. Understand that risk isn't just about loss, it's about exposure to the crowd's emotions. Hedge funds neutralize crowd risk by going against the grain, betting when others quit, and adjusting dynamically. This active defense means they can protect and grow capital even when the entire market is gasping. Imagine your portfolio as a fortress. Hedge funds design those walls with layers, tactics, and a relentless drive to survive and win, no matter what storms blow in. And make no mistake, this approach isn't a gamble. It's science mixed with art, backed by deep data crunching and intuition sharpened through years of experience. The quantitative models strive to find those hidden relationships, those tiny cracks that reveal uncorrelated paths. Meanwhile, human instincts check and balance, questioning assumptions, diving into emerging trends, global political shifts, or sudden economic changes. This fusion gives hedge funds their edge, dynamic, adaptive, and fearless. Still, many get stuck chasing mirages, mistaking volatility for risk, correlation for safety. Hedge funds see through that illusion. They hunt for what's real beneath the surface, for outcomes that don't ride the same wave. This is why they often thrive when everyone else is panicking. Emotional detachment is part of the game. Discipline doesn't just manage money, it manages human psychology. It's a mental fortress against the herd's madness. If this feels overwhelming, remember this. You don't need to understand every tactic to grasp the essence. What matters is the mindset. Hedge funds don't just chase profit, they chase freedom. Freedom from market slavery, freedom from the false promises of stability, freedom from being dragged down by everyone else's fears. It's an obsession with independence, with forging a path that bends neither to fashion nor fear. In a world desperate to dictate how and where you invest, hedge funds show a radical counterpoint. It's not about fitting into a system. It's about building your own system, one that honors individuality, one that respects the messy, unpredictable world we live in, but refuses to be beaten by it. They play the long game, patiently building layers of protection and growth, like a craftsman shaping a masterpiece over time. The world might want you to conform, but here is the truth. Non-correlated returns come from the refusal to conform. Every investor battling volatility and uncertainty today needs to understand this. It's why hedge funds exist and why they are the unlikely heroes in the age of chaos. When the market screams, when correlations spike, and chaos seems inevitable, hedge funds step in like calm in the middle of the storm. They're not just making money, they're building resilience, crafting freedom. Their gains don't ride on luck or the crowd's emotion. They rise from disciplined, diverse, active management. It's an art and a science that can't be copied by whispers of hope and flailing fingers. So if your goal is to break free from the endless cycle of market mimicry, if you want to outrun volatility, if you want your portfolio not to just survive but thrive when everything else falters, embrace the hedge fund mindset. Look beyond the obvious, seek strategies that walk their own paths, invest in diversity of thought and tactic, and above all, refuse comfort disguised as safety. This is where real power lies, the power of true independence. This is how hedge funds generate non-correlated returns, by breaking the rules, questioning the system, blending science with art, and building a fortress no storm can shake. They don't just survive market chaos, they transform it into opportunity. And that, above all, is the lesson every serious investor must learn to transcend the ordinary and become unstoppable.